Chase, looking at like an IRA, most of the folks listening, I bet the biggest part of their assets might be IRAs, 401ks, 403bs. And I always say the easiest way to look at taxes is, let's say down the road you're retired and you need $50,000. If it's in an IRA, we might need to take out 80, then pay Uncle Sam his portion, the state their portion, and then you keep 50. But that's 80 coming out of your portfolio. If it was in a tax-free bucket, and there's different ways to maybe get it, sometimes it doesn't make sense, sometimes it doesn't make sense. But if we can get it in a tax-free bucket, when you need 50, guess what comes out of your portfolio? It's just 50. We don't need the taxes are already paid. So let's start into like I know the tax, the TCJA. What does that mean? What does that stand for?
Yeah. So the Tax Cuts and Jobs Act, it was signed into law in 2017. It took effect January 1st, 2018. And it was really one of the biggest tax reform bills that they've passed in many, many years. And really what it did was it at a high level, it cut corporate tax rates. It also cut individual tax rates, which I think is really where it pertains more towards retirees and people, in the financial planning world, was the cut of the individual income tax rates, as well as the increase in the standard deduction that folks get now. And I think those are two kind of extremely important things. And this bill will expire at the end of 2025. And I think that's really why we're having this podcast, is because the time window to take advantage of some of the rules in the Tax Cuts and Jobs Act will end at the end of next year. So I think it's, we encourage folks to come in. We'll sit down with their 1040s and review all their sources of income and begin to develop a plan of, again, how taxes affect you and then how we can mitigate them.